Hello, welcome to the weekly technical analysis review for Monday, October the 8th. I'm Rafi Boyajian, currency analyst at XM.com. The pairs we're going to be looking at for this week are the euro dollar, the pound yen, and the Aussie dollar. Starting first with a euro dollar, we can see from the momentum indicators that the near-term bias is looking fairly bearish at the moment. RSI is sloping downwards, and the MACD has crossed into negative territory and is below its red signal line. There is immediate support coming from 1.1463. That was the 6.5-week low from last week, which has been holding in the past few sessions. However, if we were to see a breach of that support, we could then see euro dollar seeking its next support from the 1.1430 level, followed by the 1.1365 level. Both have acted as support and resistance in the past. A breach below 1.1365 would risk a euro dollar making a fresh more than 1 year low. The previous low was 1.13. That was the lowest in almost 14 months that it touched back in mid-August. And breaching that support would also risk shifting the neutral medium-term picture to a more bearish one. However, if we were to see an upside correction, especially as given that RSI is close to oversold levels, and any upside push would see euro dollar meeting resistance at the bottom of the Ichimoku cloud. That's around 1.1545. A break above that level would help erase the negative momentum for the pair. It would also help it meet the 50-day moving average. That's at 1.1590. Break above the 50-day moving average would help strengthen any upside momentum, though there's likely to be resistance further down at 1.1630, that's the Tenkan Sen line, followed by 1.1650, the previous congested region, and then above that we have that important resistance level which has halted gains several times in the past. That's at 1.1720. A break above 1.1720 would then help the pair make a fresh challenge for that 3-month high 1.1814 from back in September. Let's now turn to pound yen. We can see it's rather neutral at the moment from pound yen. RSI is just above the 50 neutral level, and the stochastics are hovering around 50 as well. Though the risk is clearly to the downside, immediate support is coming from the 20-day moving average, currently around around 147.64. If there was to be a drop below the 20-day moving average, we could then see the next support coming from the 38.2% Fibonacci retracement level of the downleg from 156.60 to 139.88. Further declines, so that's at 146.25. Further declines, we could then see the 23.6% Fibonacci coming into range at 143.80. A drop below that level could accelerate the declines for pound yen, and we could see the pair heading towards that 1 year low of 139.88 from back in mid-August, and that would also shift the medium-term picture back to a bearish one. So that bearish picture did start to change in September when we saw price action breaking above that descending trend line. However, since then, pound yen has failed to break above that key resistance at 149.45. So that's the immediate resistance level that pound yen needs to clear. Above that, we have 150.20. That's the 61.8% Fibonacci retracement, and then further up, we have 78.6% Fibonacci at 153, and then if pound yen was able to break above 153, then we've got that April top of 153.84, and so basically if pound yen was able to clear the 61.8% Fibonacci, that would further strengthen the bullish medium-term picture and also help shift the more longer-term outlook to more bullish one. Looking now next at the Aussie dollar pair, it's looking fairly bearish at the moment. RSI is flatlining just above the 30 oversold level. The MACD is falling sharply in negative territory and also below its red signal line. If there were to be further losses in the near term, support should come from the 0.70 handle. That's the 138.2% Fibonacci extension of the upper leg from 0.7084 to 0.7314. Below that, we have the 161.8% Fibonacci extension at 0.6942, and further down, there's a 200% Fibonacci extension at 0.6854. And so earlier today, prices did touch a two and a half year low of 0.7040. If we were to, prices have since rebounded. So if that upside momentum did strengthen further, we could see potential resistance coming at the September low of 0.7084. Not too far above that is the 0.71 handle, so that's also a potential resistance support level. That's acted as both support and resistance in the past. And above that, we have the 61.8% Fibonacci retracement at 0.7172, and further up, an important resistance is the 50% Fibonacci at the 0.72 handle. If we were to see Aussie dollar breaking above the 0.72 handle, that would shift the focus back to the upside. It would help Aussie dollar break above the 50-day moving average at 0.7250, and then clearing the 50-day moving average would help Aussie dollar challenge the September top of 0.7314. In the medium term, though, we can see that medium to longer term, that bearish picture is still very much intact. That's it from me. Thank you very much for watching, and have a great day.